You are not going to find stocks that are priced like NAII very often. Guys, we have a capital opportunity right now that is unbelievable. This is Chase Ricker. And in this video, I'm going to be doing the super breakdown of NAII, maybe the most mispriced business I've seen this year. So listen up. To begin the super breakdown, I need to get you to understand why I'm finding NAII as intriguing over any other security. And so it's this simple, guys. I'm looking for things in the world as cigar butts that own more things in tangible assets than what they sell for. It's that simple. And so you're going A to Z. I went A to Z in every single stock below book value. And what you're trying to find is something that's very well balanced in terms of equity to debt. You're trying to find something that has an acceptable return on assets, ideally 6% or above for a cigar butt. But most importantly, you're trying to find an item in the world that's too cheap relative to what they own. And so fundamentally, I'm going to assert that here today at 33 million, you can't find a stock, a security in the United States with as much tangible book value relative to the market cap at the moment than NAII. And so first of all, you're looking for something that sticks out. NAII, from a valuation perspective, sticks out like a sore thumb. And so as you're going through the stocks, and you come across something like NAII, 3-to-1 equity to debt ratio, good return on assets, good history of profitability, and it's at about 3 times earnings of just a year ago. That is something that should intrigue you. So that's it, guys. You're looking for something that sticks out. That's how we find NAII. And so what you're looking through, I don't need to assert that NAII is an exceptional business. My assertion today to you is that NAII is a slightly below average business to an average business. That's my assertion. I'm not challenging the idea that NAII is a great business. I've never said that. But that's what cigar butts are. They're average things, guys. They are not exceptional. There are so many businesses in the world, thousands and thousands and thousands of businesses. Very few are exceptional, but there are thousands of things that are average. And out of those average things, you're trying to find something that's exceptionally cheap. Price is the number one factor in a cigar butt. So my assertion is that NAII is an average thing. And so as I look back at the history of NAII, let me break it down for a second. The business gets publicly listed in the mid-1990s, and they make supplements and powder. They're a manufacturing business for supplements and powder. So one of the customers that they've served, for example, for 30 years is Juice Plus. If anybody's ever heard of Juice Plus, O.J. Simpson promoted Juice Plus as the juice before he was O.J. Simpson, the criminal. Funny enough, fun fact. But NAII has been around, publicly listed for almost 30 years. And right now is right there at possibly the cheapest point relative to tangible book value in the history of NAII as a publicly listed stock. And so as I've gone through the history of the business, I'm not making the assertion that NAII is exceptional. I just need it to be average. And that's my thesis, is that NAII has a 6 to 7% return on assets with a slightly better return on assets at super cheap prices because they'll have the ability to buy back shares, and they do. They do have an owner, Mark Ladeau, that I trust as a manager and a capital allocator, and that's one of the things that I like about NAII a lot, is that he not only allocates capital quite well as the CEO and owner, it's that he owns a good chunk of the business as well, and I think he owns a lot of interest, or has a lot of interest in making me money. as a shareholder. And it's not hard to make money for your business when your business sells at 40% tangible book value. And so, again, it's an average thing. NAII has a great history of being profitable as long as the customer wants their product. If you look at the long history of NAII, the only times that they've had large losses is when a customer does not need any more product at the moment. It's those quarters where they have a customer stop ordering that they typically lose money. And that's what caused this huge price drop. And so, again, there are problems with NAII, just like there are problems with lots of other businesses. I'm looking for things that have problems that cause giant price drops. And NAII in just 2 years went from about $150 million at maximum down to $30 million trading midday just a couple days ago, which is exceptional. It's incredible. But during that fall, the tangible book value at that business, $86 million, that has not dropped yet. Everything is still the same relative to the properties, the cash, the receivables. Everything looks and feels the same. Now, we're going to suffer losses because the news that came out about NAII was that one of their customers stopped ordering, which caused a furlough at the business. I'll put the link up and the article up right now. And this furlough is going to cost NAII probably a couple $1 million. And that comes from nothing but a broad estimate looking at the history of their business. But when something falls from $150 million in value to 30, that's not a fall that's justified with news like that. That's my assertion. You don't have to be making assertions of excellence or brilliance when you're a cigar butt investor. I know there are problems. I know NAII is below average to average, but it's too cheap. And so I think the next place to go, as I'm getting you to understand how I'm approaching the business, what it is, what it does, how I feel in general, I think we got to go to the 10Q. So let's look at the stats. Look at this board for me. You've got a $33 million market cap. You've got $123 million in assets, tangible things. You've got 37 in liabilities, and you've got 86 in net tangible assets. That should not feel right. That, if you just saw that and you assumed that the business was fairly justified or was somewhat justified in price, you would have to have a thing that's been losing dollar after dollar. It'd have to be the most money-losing thing I've ever seen to have that price justified. But it's not. That's not what NAII is to me. I think they're just losing money in quarters where a customer stops ordering. And as long as NAII returns at any point to a place where all the customers order, they've always done exceptional when that happens, no matter who the customer is. So let's take a look at the 10Q. I just wanted to point out the ratio to start. Look at that ratio. 123 to 37, and it's selling for 33. Immediately, you should be looking through that business. If you ever see a business that's priced like that in your life at any capital level, you should at least look through the business, because that alone is a sign it could be exceptional. I've got the 10Q pulled up right now, and so we're going to approach this from two different perspectives, guys. We're going to be looking at the latest 10Q from the first quarter, but then we're also going to look at the 10Q from 2019 because it shows us something about what NAII might be worth. And so let's go line by line. Everybody's got to love a good 10Q. There's literally nothing that gets my juices pumping more than a good 10Q, guys. You should love 10Qs. I love them. Current assets, ladies and gentlemen, let's take a look. We have a total current asset value of 66 million. We've got property and equipment at 54 million. But let's take a look at the next line. Operating lease right-of-use assets. Here's something fun. In 2019, NAII had to change the way that they accounted the business. And before that date, they didn't have to put the operating lease assets and liability counterbalance on the balance sheet. So when you value the business, you actually need to cross that out when you compare the business to its historical value, because the accounting by which we come to all the valuation metrics completely changed. And so as I look at the balance sheet, I actually cross out the 20 million in operating lease right of use assets. And I also cross out 20 million, or the equivalent in value, in long-term liability operating leases, because they had to add both of those just because of an accounting issue. So when you actually look at the true asset to debt ratio at NAII, it's 123, closer to 124 million in assets and 37 in liability. That's why I put those numbers on the board when we were doing the board a minute ago. But as we're looking through this, there's no intangibles. That's one thing we really like. And really, your assets are very simple. It's not hard. And if you're going to look at a company's current assets, the big question is, how often has that company returned their current assets into cash over the history of the business, and how honest they were about what those assets were worth during a bunch of different situations. And NAII actually has a very good record of not having to write their inventory off. I think the biggest inventory write-off I'd ever seen, or the only big one I'd ever seen at NAII happened in the early 2000s. But I haven't seen a big write-off. They converted a lot of the business into cash, and that's why we're going to bring up the 2019 10Q in a minute. But NAII has done an exceptional job of converting current asset items back into cash. If you trace yourself through the history of the business, you will see that. And another thing that we're going to be considering is whether or not the property and equipment is worth the amount of money that they report it as. And so the other question as well is whether or not we need those assets. Are we looking at a business that needed to build those assets to keep operating? And my answer is no, because the new facility that caused the price drop, that I believe it's right around $20 million worth of the property on that balance sheet item, and then it's got a few $1 million worth of equipment. That alone is the biggest investment NAII has actually ever made in the history of its business. And they just made that. We have not seen the results of that investment. And so that additional investment makes NAII look more price heavy from the asset perspective than it really is. And so that's part of my thesis, is that when you look here at NAII's balance sheet, my thesis is that a lot of these balance sheet items, especially the current assets and the property and equipment, which is pretty much everything, those items really are worth what they paid for them. And they have a history of proving that. And the way you again, it's a purely subjective thing. It's a character read as well. But again, and another factor that weighs into that is why or how easily the assets exceed the market cap. So if the market cap right now is at 33 million, guys. At 33 million, you've got 66 in current assets. That on top of only 37 in liabilities. Remember, you minus the 20. That alone, just the current assets, beyond the 37 in liabilities, gets you to 30 million, and the market cap is 33. That is ridiculous. That's absurd. And then secondarily, you get $55 million worth of property and equipment for $3 million right now. And obviously, part of that is, part of obviously what's causing that is the fact that NAII is expected to lose a bit of money, but they're not going to be losing money like that. I think that with all the problems that I've read about with NAII, I think they'll lose 5 to 7 million at worst by the end of the year, and they'll get their operations back to normal eventually. I think that's worst case. And so at worst case, I see the tangible equity falling to 78 million in value, 79, 80 million from 86. I don't see a whole lot worse of a situation happening, but I could be wrong. And even that's the thing, is that you have to work on scales. Even if you devalue the inventory significantly, you still have an incredible purchase. Even if you lost $40 million worth of book value, you still can buy a stock that could rise 50% up to book value. That's incredible. That's the sort of thing that we're looking for. And so my assertion on the 10Q, it's more of a philosophical thing than a numbers thing, but my assertion is that I feel that those two items, the current assets plus the property and equipment, that those two items alone are going to get me past $70 million in actual world value, regardless of what happens with all the issues right now. And as I've talked about, NAII is a profitable company in just about every single quarter that they have all of their customers ordering product. And so it's the sort of business that you can expect to lose money every once in a while because of the nature of the way that it runs with individual customers. That's just how that works. And if you can't buy stocks like that, you can't buy stocks like that. But I think that stocks like that create exceptional pricing opportunities because they'll have moments where bad news comes out. I never expected NAII to operate without bad news coming out. And let's take a quick look at the 2019 10Q before I get too much into the rambling. But in 2019, we had a business that had $40 million alone in cash and accounts receivable. And from 2019, or from 2018, September 30th, 2018 is what we're looking at. From that point, we have gained $15 million in net tangible book value. And we've also repurchased a good chunk of shares. And if you look at this business, imagine you took a business that had $40 million in cash, cleared of debt, 72 in equity, and you invested $27 million into a new property and a new facility. It wouldn't feel right, even if the new property and facility didn't run for a few years. It wouldn't feel right for the entire business to sell for $33 million, regardless, even if the whole place burned down. So that's the thing, is that it's interesting how I feel like you could burn down that facility and I'd feel okay because they'd get insurance proceeds from all the stuff that they bought. That's how insurance works, is that you would get what you paid for it in property value. Even in that situation, I like NAII as a purchase at $33 million. And again, when you buy a security, you're looking for things that have proven that they can invest in and also take cash out of each of their balance sheet items without losing the value eventually, without accumulating into a giant write-off. And I just don't get the feeling with NAII. We've been here for 30 plus years, and there has not been a single time there's been one giant unexpected write-off of assets, but they've cleared the business of of debt multiple times. We've talked assets, and I am an asset-based investor. I'm a cigar butt guy, but even as a cigar butt guy, you must still look for things that sell at a great ratio to normalized earnings. I don't buy things that lose money over time. I buy things that might temporarily lose money, but I'm still looking for stocks that might sell at 5 times normalized earnings, because it's the things that sell at a very low ratio relative to normalized earnings and a very low ratio relative to what they have that are the most exceptional assured capital opportunities, if you can be assured in anything. And so the other side of the coin is the earnings side. And so I'm going to pull up some stats real quick. Let's look at the revenue history for NAII. And as you can see, it's grown. It's about doubled and a half over the last 10 years. It is a growth business. And so I know that their goal is to continue to increase revenues with the new investment, with the new facility that hasn't given any proceeds yet. And I don't need to expect this business to grow. I just need them to continue earning money, because if you look at the net income, which is the next page I'll pull up, they've already proven that with a lot less in terms of revenue and assets, they've already proven an ability not just to generate net income of $10 million, but net income that could have been returned back to shareholders, net income that got stored as cash afterwards, net income that didn't get put into future assets that were needed. It was a store of value. And so that's how we ended up back looking at the 2018 10Q at a point where we had 40 million in cash equivalents and receivables. NAII actually has a really good history of making money. They only lose money in a few quarters a decade. It's really interesting. And if you look back at their very long history, it's just when they lose a customer or something strange or unexpected in terms of demand happens. And so if you look at these numbers, they've generated 10 million in trailing net income 3 separate times now. And with that number, NAII is at 3.3 times those earnings. That's exceptional. But if we look at a range, you could say that NAII averages 6% return, 7% return on assets. And at the current moment, I think it's right there about 5 times earnings if you account for the increase in revenue lately, normalized earnings, what I would consider a broad estimate. And that's what I'm looking for. I'm looking for things that sell below what they're worth by a significant margin that could be at a very low multiple of what I truly believe normalized earnings are. It's time to talk turkey to end this video, ladies and gentlemen. I think NAII is the most exceptional capital opportunity I've seen all year, straight up and down. And at $33 million, I am going to be buying more of the business because as I've disclaimed before this video, I own 1/400th of NAII. I bought 1/400th of the business at $45 million. And so right now I'm down $25,000 proudly. And that's why you make capital decisions at levels that you can justify. You know, stocks are like drunk drivers. Drunk drivers, you don't know where they're going to end up. But, I made a good decision about where I bought. And so at that point, at 45 million, I have felt that NAII was the capital opportunity, the top one for me. And so at 33 million, it's become exceptional. I don't think these opportunities last long. I don't think they stick around. And so as a 1/400th shareholder of NAII, I am going to be unloading the cannon after the market opens next week. I've got some cash transferring that way. NAII is clearly my top security idea. Chase Ricker, you heard it here. NAII at $33 million is truly exceptional. I've looked through a lot of cigar butts. I've dove through a lot of dumpsters. NAII at 33 million is exceptional. And so I'm going to be continuing to accumulate shares, and As long as it's at this price, I love it. You're not going to find stocks with a margin of safety like this very often. My conservative fair value is $80 million for NAII, which is obviously way more than the current $33 million market cap. And that gap is much greater than any other gap I've got with any security in the market. And so that's me going thing by thing, A to Z, security by security, trying to find things that are mispriced. I truly believe in my heart, Chase Ricker, that NAII at $33 million is the most exceptional capital opportunity I've seen this year. I want people to know it. I want people to hold me accountable. And, the goal of this channel is to make people as much money as possible. If you're not making money, get the hell out of here. And so, like and subscribe. If you liked videos like this or like what I'm doing, let me know. If you have any questions about NAII, but I want you to like the video because I'm going to be making more of these as long as people are watching and as long as people are making money. So guys, NAII, if I get another capital opportunity, I will let you know. I'm going to be making a video on JCTCF soon. I made a 0.5% position in that company. I just haven't had a chance to make a video. And I also think NAII took my breath away. That's why I had to go with NAII first. So JCTCF, that video is coming soon. Like and subscribe. Chase Ricker, the capital allocator, checking out. You got it, baby.